Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, May 14th, and we'll see how things look for Thursday, May 15th. To start, let's recap what happened on Wednesday. The S&P 500 opened slightly higher, flirting with the psychologically significant 5,900 level. Trading remained subdued, with the index oscillating in a narrow range between 5,900 and the daily pivot at 5,879. By the close, the S&P 500 eked out a modest gain of 0.1%, marking a positive session but on below average volume, a sign of possible waning conviction. The quiet day followed a strong multi-day rally, fueled in part by optimism surrounding progress in the U.S China trade talks announced over last weekend. However, the market is starting to show signs of fatigue. While prices edged higher, short-term negative divergences are being observed where momentum indicators such as the advanced decline line and McClellan oscillator are beginning to show some weakness. This suggests caution as the market may be nearing a point of short-term exhaustion. Looking at the broader market context, the S&P 500 remains positive across the short, intermediate, and long-term timeframes, though it's still grappling with a long-term downtrend. Encouragingly, the index is trading above both its 50-day and 200-day moving averages, raising the possibility of a bullish golden cross if this trend persists. However, a key concern is the rise in interest rates. The 10-year Treasury yield climbed to 4.53% on Wednesday, a level where stocks historically begin to take notice. Higher yields could pressure future corporate profits and reduce more current liquidity, potentially weighing on equities. Meanwhile, the VIX, or fear gauge, dropped to 18.62, below the critical threshold of 20, signaling reduced volatility but still elevated compared to recent years. Sector performance painted a mixed picture. Megacaps, tech, semis, and growth led the charge, while staples, industrials, energy, and real estate lagged. This divergence highlights the market's reliance on growth-heavy sectors to drive gains, a dynamic to keep monitoring. Turning to economic data, Tuesday's CPI provided a boost, with headline inflation rising lower than expected, up 0.2%, and core inflation remaining flat. This fueled Tuesday's rally as markets welcomed signs of moderating price pressures. On Wednesday, the MBA Mortgage Applications Index rose 1.1%, and the NFIB Small Business Optimism Index dipped slightly to 95.8, reflecting ongoing concerns about tariffs and economic uncertainty. Market sentiment is also shifting more positive. Goldman Sachs lowered its one-year recession odds to 35%, down from 45%, while Bloomberg's consensus sits at 40%. Sentiment indicators are approaching overbought territory at 70, nearing the 75 level, where a contrarian perspective is often prudent. These developments suggest a market riding a wave of optimism, but potentially vulnerable to a pullback. Looking ahead to Thursday, May 15th, a pivotal day for the markets. There is a slew of economic reports that will be released. This includes jobless claims, continuing claims, retail sales, the Producer Price Index, or PPI, Empire State Manufacturing, Philadelphia Fed, industrial production and capacity utilization, business inventories, and the NAHB Housing Market Index. These reports will move the markets, but all eyes will be on Fed Chair Jerome Powell's speech, which has the potential to overshadow any data. Powell's comments on monetary policy will be closely scrutinized. From a technical perspective, the S&P 500 faces resistance at 5,900. The market remains positive across all time frames, but is overbought in the short term, with indicators such as the Stochk RSI, Williams Percent R, CCI 14 and 20 flashing extreme readings. In the intermediate term, the TTM squeeze is flashing a very extreme reading. Negative divergences in the bullish percent indexes and advanced decline lines further suggest the potential for profit taking. Seasonally, this is options expiration week, which can lean slightly negative, but post-election years historically favor gains during this period. It's best to keep an eye on ongoing trade talk developments and tariff-related news as these continue to shape sentiment. In conclusion, the market is in a positive posture but showing signs of short-term exhaustion. Thursday's economic data and Powell's speech could likely dictate the near-term direction, with 5,900 as a critical level to watch. While growth stocks continue to lead, rising yields and technical divergences warrant caution. Please note that each day on the YouTube Community tab, the pivot points for that day are posted. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.